Welcome to the Millionaire Mentorship Podcast. We discuss real estate investing, entrepreneurship, and business to help you retire and become financially free. Make sure you share this podcast with someone who could benefit from it and leave us a 5-star review. It truly helps me out. This show will mentor you towards financial freedom. If I can do it, so can you.
Welcome to the Millionaire Mentorship Podcast. Today I've got a very special guest, Chris Naugle. He's America's #1 money mentor. Got tons of badass content online. Also, former pro skater, former motocross guy. Tell us about your story, brother.
Yeah, so former pro snowboarder, so serial entrepreneur, started at 16 and never really looked back until the early 2000s when I was forced into Wall Street, and that was because of the .com crash. But so we were talking motocross and ATVs, in the interim, and that's how I grew up. I grew up on the town. I was raised by my mom, and that was my passion as a child: racing BMX, skateboarding. Snowboarding came a little bit later, and when I was 10, but when I was before that, all I did is rode dirt bikes and four-wheelers. And in my mind, I was going to be a pro motocross racer. That's what I was going to do. And it was just some of the best times, but, path took me a different way. I found the snowboard and just instantly fell in love and, got really good at it. I worked really, really hard because I'm from Buffalo. So if any of you know Buffalo, we do get a lot of snow, but we don't have mountains. We just have hills. But the hills where I grew up, they had great snowboard parks. So I would literally go to the mountain or to the hill and I would just hike because sometimes I couldn't afford passes, so I didn't have a lot of money. So I would just hike up the hill and find the jump and just loop it, just keep walking it. And I did this nonstop. And then when I wasn't in the hill, I was at a golf course by our house where I grew up, and I was in a ravine. So I would build jumps out of the sand traps, and that's how I would learn all the new tricks. And then I would take them to a trampoline if they were flip tricks, learn them there, get the body motion and get your mind around it, and then take it to the snow at the country club. And then from there, go to the hill and do it and compete. And that's how I got so good at snowboarding. And that's how I became professional. And, my life was a dream. Literally, I went pro in 19. I had a chain of snowboard shops that I started when I was 17 and a clothing line at 16. So all those things played into that vision, right? The shops were conducive with the pro snowboarding, and it was literally the only thing I can describe it as is, if you go to bed and you have a really good dream and then unfortunately you have to wake up. Well, I did have to wake up, from that dream, and that came with a recession, the first .com crash. My business took a major plunge. And I realized that if I was going to keep the businesses afloat, I needed to figure a way to go out and make an income that wasn't relying on the shops paying me a check. And also, I thought I'd have to inject some money. So put a resume out, and I landed in Wall Street, man. Of all places for a punk skateboard kid to land, I landed in Wall Street. And it wasn't because that was the plan. It was because those were the only ones, I'm going to say dumb enough, to call me back from a one-page resume that literally said nothing other than I'm an entrepreneur. I got 2 years of community college, in business. And outside of that, everything fit on one piece of paper. And, I started, that would have been 2002 when the journey, actually 2001 when I first started kind of interviewing. And then 2002, early 2002 in the winter is when I took my first job. I didn't stay at that firm long because it was a chop shop. And I eventually moved to a giant firm out of New York City. And that's where the career began. And it went from 2003 to 2018. A lot happened during that period of time. So I guess I don't want to go too deep into the rabbit hole, but during that period of time, I still ran the shops. Okay. I still had them, but I was working on the businesses, not in them. That's a pivotal thing. I don't think I ever would have found my way to that point, which sometimes I wonder, entrepreneurs, when they chase their dream and they take that leap and they open their business, so many of them get stuck and they create almost a prison for themselves, an entrepreneurial prison, because they create this environment, this business that literally consumes them, and they can't find their way out of it. They're always working in it. And I fault a lot of restaurant owners for this. They can't get out of the restaurant. They're the best cook, they're the best bartender, and they never find their way out. But I did, and I found my way out of sheer necessity. So that's when I started working on the businesses. And it was funny because you would think when the entrepreneur, the visionary that had the vision, moves on and is only there weekends or maybe a couple of nights, you would think the business would plunge, and it did the opposite. It skyrocketed. the retail stores started doing better than they ever had. The managers were really dialed on their job, and it allowed me to kind of rise above and focus on like cool things like event planning and building skateboard, snowboard teams and marketing. And when I did that, it just made the business even cooler, because in the perception of the public, the people, our customers, you know, they saw it as we were doing things no other shop was. And that only was because I was freed up to do those things. And not only that, I had income coming in from Wall Street that made it so I didn't need to take big, you know, chunks from the shops, which, you know, allowed the shops to spend money on marketing. And that's how it grew. And I did the Wall Street thing because I actually liked it. At first, I hated it. I went from wearing a beanie and a hoodie every day, Troy, and so now I'm wearing a black, blue, or gray suit every day. Had to shave, had to do all the things I just didn't like, but I got accustomed to it, and I did really well. I rose to be one of the top advisors in that firm, and left that firm in 2016 because the client base I had was 800 clients, but I started to slowly realize like those weren't my clients, they were the firms. You know, right. I had the RIA business, which is a registered investment advisory. I had business there. That was my business. And I started thinking, okay, if someday I want to sail off into the sunset or do something different, right, like that's all I have. So I cut the ties. Everybody thought I was crazy. I went from having lots of friends, my social circle were my other advisors I work with, to now none of them talked to me. None of them wanted to be around me. None of them wanted anything to do with me because I had nothing to give, because I went to a different firm, a boutique, and a lot changed. It was a really humbling and difficult period of time, because I went from making like probably in that point, you know, that would have been the 2000s, about 300,000, a little more, that I was making pretty consistently. It was pretty easy to make because, you know, I had a big book, to then I hit zero. I literally went from that to zero, but none of my expenses changed, and I had to quickly build it up, but I did. And me and my wife were in real estate because I was doing that to supplement, and that kind of took hold, and we got a TV show on HGTV in 2018, but that posed a problem for the financial firm I was at because they didn't want to approve what they call an outside business activity. They didn't want an advisor to now be a public figure on television. So I literally at that point kind of had a decision, and she said that to me. The compliance officer said, you got to make a decision. Are you going to be an advisor or are you going to be a TV show star? I mean, and Troy, I guess I'd pose that question to you or anyone on your audience. Like, what would you have done? Would you have went with the steady Eddie paycheck, or would you have chased your dream of going after the show? And some of you would say you would have done the show, and I did. And I sold my practice, and that was the real estate realm. Now the show aired 6 times, and we never went on to series because HGTV was sold to Discovery right at the exact time. But listen, in life, everything happens for a reason. And, you know, at the time, I wanted to drive my truck off the road into a tree. Like everything that I had burned the boats. I'd literally given it all up for this opportunity. And then just by something completely out of my control, call it the serenity prayer, right? The thing completely out of my control, I now wasn't able to chase that dream. All that work for that show was gone, never coming back. And I didn't know what my next door opening was going to be. And it happened to be in what I do today, which I was around a little bit at the end of my advisory career, which is, you know, the privatized banking, infinite banking concepts. But now I walked through that door and I said, you know what, if you look at a physician, this was my mindset, you know, and I was an entrepreneur. I've always been a physician, like a regular doc, really doesn't make a lot of money. They look like they do. They're perceived to make a lot, but they really don't make a lot. And I knew this because I was an advisor. I'm like, holy crap, that's all you make? And I never said that to the doc, but I'm like,
well, let's talk about that. That's actually a good point that you bring up, is that, I mean, the anesthesiologists make as much as the doctors a lot of times. And then after, I mean, you're talking about taxes right now is where you really get your lunch eaten. So you want to talk about that? Like, what do doctors make? Like, what's a good doctor make and what do they take home?
Sure. So a general physician, and I'm going to go back a little bit to like when I was an advisor, they'd make $120,000 to $200,000, which to some of you listening, you're like, well, that is a lot of money. But really, for how many hours they do and how much schooling they have, that's nothing. But what I was trying to get to is not what a general physician makes. You know, your normal doc that you go to see, right? That's about what they make, some less, some more. But then when you look at like a cardiac surgeon, you look at, you mentioned an anesthesiologist, any specialist, Anybody that, any doc that has literally gone down the rabbit hole to do one thing and one thing really well, their income is $800,000 to millions of dollars. So think about that, right? The general physician who's seeing patients every day, all day, like has no free time because they're always busy. They're making max probably 200 grand and maybe a bit more today, but it was 200 grand. But then you go to a surgeon who does a couple operations a day, maybe, okay, takes time, vacations, does that. They're making, and I live in a neighborhood now, I'm Previa, I do very well. I live in a beautiful neighborhood that is literally all of these surgeons and specialists, and they're all making millions of dollars, and they work less than the general physician. So when I went from, I'll call my financial advisory practice, I was a generalist, right? I could do everything. I could do your life insurance. I could do your advisory plan. I could set your retirement up. I could do your 401k for your company. Like I was a generalist, and I made $400,000, okay, which is good living. I'm not saying it's not, but then when I was looking over on this other side, and there wasn't many of us, but the specialists, the privatized banking, the infinite banking specialist, the one that was my mentor was making millions of dollars. And I'm like, he does one thing and one thing only, but he is one of the best there is at it because that's all he does. And then I related that to a doc. A doc can go down this path where they do one thing every day, but that one thing they do with utmost precision, and they make 10, 20, 30x what the general physician that's working harder does. And that's the path I went. And that's how I've gotten where I am. And I just happen to have that creativity from the snowboarding years, from marketing in my stores, that I just took that idea of having fun with marketing, right? Going out in there, tell your stories, do videos, and all the stuff I did with the TV show. I just took that to the world that I'm in now, the wealth space, which was a very cold, dry, boring, antiquated business. And I just brought this whole marketing realm to it. And, there's a lot of reasons for my success, but that's definitely one of them. I just found a niche. I went deep into it, and I became the best there is at it.
That's awesome. I appreciate you sharing all that. A couple of things that I think about. Number one, I think, man, we got to be close to the same age just based on what you
47.
Yeah. So I'm 47 this year. So I'm like, just based on the way you're playing everything out, like I witnessed all of those things that you're talking about. The .com crisis is when I first got into stocks. Going through the, when you talked about having that job and not having control, I went back, I worked at Intercom Radio as a radio guy, sales guy, making a great living, $200,000 like you talked about, but then realizing after I got my check, $82,000 was taken out for taxes. And then, realizing no matter how good you are, having that same conversation with my boss that you had, which is like, hey, you have a show. I had the one like, hey, they changed the show that we were selling. I was selling radio. They changed it. And I'm like, I'm going to lose a bunch of money this year. I'm like, can I get this? And she's like, you got to choose. And I'm like, I'm choosing to leave. So a lot of key points that you hit on that really, for me, hit home because of us being very similar in the same age. And then you having a background. So my question, I want to get a little bit deeper with you just as I feel like I heard this the other day. I don't know where it was, but it said that the entrepreneur's journey, a lot of the entrepreneurs come from broken homes and we're so used to having this scramble and just chaos and being used to chaos that we thrive in situations that are chaotic, right? I didn't have my dad involved in my life. He was there, but he wasn't there.
Same, dude. Same.
So I just thought, I was like, man, do you feel like some of your childhood, I had this whole conversation hiking a mountain with my buddy last weekend, and we were just talking about psychology and how, what we're fighting in our DNA. I almost feel like if I'm in motion, like we talked about driving fast before, I feel safe. I feel like I'm going. When I'm stuck in a plane, I feel like I'm just I'm out of sorts or stuck in a crowd. But if I am flying, like you talk about on motocross, if I'm hammering it going 80 miles an hour, I feel comfortable. I feel at peace. I feel in charge. I feel in control. So I'd like to know a little bit about your childhood and where this came from and where, you wanted to be the best at everything. What drives you, I guess?
Yeah, it's interesting. I've done a lot of work on this on myself. I spend a lot of time and money working on myself to be better. And to understand yourself and to get better, you have to understand where you've been and where the trauma is as a child. So, my upbringing was actually a really good one. I come from a broken family. So dad and mom split. I was 5. My dad was an alcoholic for most of my life. He beat it. I don't talk to my dad anymore, although I'm going to try to rekindle that again. My dad's birthday is the 13th, so I'm going to send him a letter, well, anyway, I won't go there, but like a lot of that trauma as a child was that broken home, watching my mom, who barely made ends meet. She tried, but she always put me before money. So, we went with a lot, or I shouldn't say we went without, she went without. And I grew up like that, we're not eating the outside, shut the door, blah, blah, blah. We can't afford that. It's just all those things. And listen, like, I want to be transparent. Like, I grew up in a 700 square foot 2-bedroom home. That was the home I grew up in. It was home. It was awesome. I had, an acre and a half of land to ride my dirt bikes and BMX. And listen, I was a kid that back then, just you can relate. A lot of the kids today can't. We didn't have cell phones. Yeah. So we had the outside, man. We just went out. But because I was an only child, a lot of what I did was I had to be creative. And, if you follow Earl Nightingale talks about the difference between success and failure. And he talks about it in The Strangest Secret in the World. And the difference between success and failure is very simple. It is people that are successful, the 5%, as he calls it, they create. They created their destiny. They created their business, their plan, their dreams, their whatever, their future. And those that are not successful, the 95%, this is sad. This is fact, folks. Look at Social Security. If you look at Social Security numbers, out of all the retirees, only 5 of them are going to be financially secure at the age of retirement. And only one's going to be wealthy. Out of 100%, one person out of 100 people will be wealthy. That is sick that we live in the United States of America, and that's the reality. But growing up, that's all I knew. Go ahead.
I was going to say, you brought up Earl Nightingale. We are on the same wavelength. That is one of my favorite. I've watched the YouTube Strangest Little Secret. I've had it on CDs. I've had it on tapes, for the last 15, 20 years. And if you haven't listened to it, we'll link down to it. The Strangest Little Secret, exactly what he's talking about. 95% of the people don't know why they go to work in the morning. They don't know why they wake up because the other guy did. Because the guy, they don't question.
You're absolutely correct. And listen, two more things to unpack on Earl. First off, I said how success happens is creation. So that is just now pieced together my childhood. All I did was create because I was a very artistic kid. I drew a lot, but I didn't have anybody else to lean back on. I didn't have sisters or brothers. It was just me and mom. So I had to create, and I had to actually grow up relatively quickly because of the scenarios. So the reason 95% fail, you started hitting on it, but it's one word, it's conform. They conform to somebody else's failed reality, somebody else's failed dream, somebody else's failed plan. And unfortunately in life, we all have gone through that. Somebody has told us our ideas suck. When I told my family, my father, my uncles, everything else, when I was looking for money to open Fat Man board shops, everybody told me it was the stupidest idea. I'm going to lose everything. Just go. My dad said, go get a job at the factory, Delphi, with a radiator plant. And, but everybody will give you the advice they're just trying to protect you and insulate you because that's all they know. But all they know in theory is conforming to what somebody else told them their life should look like, their parents, their grandparents. It's a tough thing. And very few people, 5% of all the people you'll ever meet break free from that. They break free from the chains of conformity. And Earl talks about that. Now, you had mentioned you went down the rabbit hole with Earl Nightingale. So I'm going to challenge your entire audience. I did something that miraculously changed my mindset in a way that even perpetuated my success. And when I found Strangest Secret in the World, in that he said he challenges you to listen to it. And I listened to Earl Nightingale every day for 30 straight days. And every single day I would send a text to a group of people that I was doing this with of the one takeaway. And I did this for 30 days. But you see, I didn't stop at 30 days because I felt and you would all think after 30 days, you build habits, you got it. I went for 70 straight, actually it might have been 74 straight days where every single day I listened to a 30-minute video from Earl Nightingale, the same one, Strangest Secret in the World. And I wrote down every day one takeaway. It forever changed me, folks. And I didn't just stop there. I went down every video Earl Nightingale has on YouTube, every single one. I've read every book, including him read Think and Grow Rich. I still today amounts so much of the way I think to what Earl taught. And folks, you all know, if you follow Earl, you're going back to the 50s and pre-50s. That's what era that was. And it was still today, still one of the most powerful things you can learn. But so in my childhood, all that trauma really was just made me be creative. And I did have one person, I will say, like Rudy, like the movie Rudy, and I've met Rudy many times and I've paid him to come out and speak, but Rudy had one person that believed in him, and was two, his brother, but then his brother died, and he had one person that believed in him, and only one, and it was a janitor. The person, you know, in that movie, you know, would be the lowest man on the totem pole, but he only needed one person to believe in him. The person that believed in me, I call her my unconditional one. My TEDx talk talks about her. Every speech I've ever done talks about her, and it's my mother. My mom was the one person in my life. She, you know, she still lives in that same house, you know, the same house I grew up in. She's still a very simple woman, but she is the one person that has never, ever not believed in me and never not let me go out and just dream big. She every once in a while is like says to me, you know, is enough? When's enough enough? Like, you don't have any time. Like, when's enough enough? And my answer is always, there is no amount that's too much, because there's too many people that need help. And if I say this is my number, then that means that many people I can't help them. But that's how I grew up, man. And
that's awesome.
Another trauma was the first job I had. I worked on a farm at 14, which was freaking awesome. If any of you have children or are young enough, please have them work a summer or two on a farm. It will condition them to be the best they can be throughout life. I promise you that, because that hard work at a young age is so rewarding, but yet it's so detrimental to creating a work ethic that will never change. And I had that, but my first job was at a restaurant, and I was degraded terribly. I was treated worse than pond scum, and it put me in a clinically depressed situation. I never got help for it, but like, I now know depression. I know what it is, and I know that's what I was. And I remember I did everything in my mind to think of, how do I end this pain at this job? And there came a day where enough was enough, and I quit. But I had been thinking for months, never thought it would happen, for months, of a way out. And I was a skateboard kid. And back then, we're talking 1992. Back then, there really wasn't a lot of clothing lines that made snowboard stuff. There was Vision, there was OP, there was Volcom was just coming out in the snowboard realm, and I was infatuated with that company. And I started drawing, because I remember I said I was artistic, and I started drawing all these designs for T-shirts. And I started literally taking those designs, and I would draw the shirts, and I would start kind of organizing it and creating catalogs of these designs, which were nothing back then. Remember, this is just an idea. I was working at this restaurant and snowboarding, and the day I quit, I came home, and I knew I couldn't just tell Mom I quit. I came home and said, Mom, I quit. I thought she'd be mad at me. And I said, but I want to open this clothing line. It's going to be called Fat Clothing Company, PHAT. I'm going to print shirts with Mr. Mahalski, who was my art teacher, because he in his art department, he also printed all the T-shirts for the school, and I would help him print after class sometimes. And that's what I did. And we printed the first dozen shirts, and then it was 2 dozen, and then it just spun off from there, which then led to the shops and the rest of, you know, where I'm at now. But that's my upbringing.
So yeah, you've been a hustler. I think it's so. The other thing I was interested in is, so the whole time you worked on Wall Street, you kept these stores open?
I sold, well, the stores are still open today. I just don't own them. I sold them in 2000, let me get this right, 2010, because we didn't get into the other pain. Like, .com crash led me to Wall Street because I was almost broke. But I didn't talk about the Great Recession. So during the Great Recession, I was an advisor and still had the shops, and also was getting into real estate. I developed a strip mall where my one main store was. I had several stores, but that recession brought me to my knees. And it's sad to say, because I was an advisor. I should have saw it coming. But being an advisor, everybody said, oh, it's fine. It'll be fine. It's just a paper loss. And that's what we told our clients. But what I realized then is everything shut off. My income went flat. My retail stores plummeted that Christmas. I couldn't make my bills, and we had bought lots of snowboard stuff because it was a good season the season before. So I went deep into my pre-orders, and you can't cancel them. So I literally was buried. And I remember at this very point is when I was developing that strip mall. In that strip mall, I borrowed the money. The only way I could get the money to do it was from these hard money lenders, terrible guys, awful guys. But guys that also wouldn't, you know, if I couldn't make ends meet and I couldn't pay them, they're not guys that would have just taken the property. They probably would have taken me out back somewhere, and I would have lost some fingers and some toes or something. I mean, like, I borrowed money from the wrong people. But I remember I was so fearful knowing that, that when I just was watching all my money. I took all the money I could from my 401k. I exhausted everything trying to keep this all afloat during the Great Recession. And I got to the point where I had literally 30 days before I was broke.
Yeah.
And I had not enough income coming in to support things because my financial advisory business, the one that I was making hundreds of thousands, literally would just flatlined. And I remember I had this, my girlfriend had just moved into my house, and I came home one night really late. I was trying to do all the work at the plaza. I was working Wall Street. Then I would go to the shop and work because I had to cut staff. And then I would go over to the plaza and work till 2 a.m. or whatever. And I came home one night, I don't remember what time, probably 11 at night. And I sat her down, Larissa, and I said to her, I said, sweetie, can you help me pay the mortgage and also help me pay the utilities? And also I have to move my friend Pete into that bedroom there. And I was thinking about renting the upstairs bedroom to Jessica, like all in one sentence, because folks, when your back's against the wall, you just got to do the thing you would never, ever do. And you just have to ask for help. And I had no one else to ask. She had a job at a bank, didn't make a lot of money, but was living in the house. So I just felt like, hey, let's put it on the line, because otherwise I'm going bankrupt. And long story short, she did. I thought she was going to walk out the door, but she did help me. And today we've been married. Gosh, how many years has it been now? It's long enough where like I have to literally think about it. 15, 16 years. We have a little girl, Vivi.
That's when you know someone's got your back, right? Like, yeah. And I will say, like, you're talking about your mom. My mom is a big inspiration for me as well. And this is something that I think that people really need to understand. And you mentioned Think and Grow Rich. You mentioned a lot of things that I'm, written in 1937. I think this is more important than anything that really comes on these podcasts a lot, is that if you don't have a good woman behind you, you will not reach your full potential, period. You can look at any successful guy, they may have to climb through a few of them to get there. But a lot of the reason, like, I was successful before I met my wife, but having my wife really kind of rein me in as a little boy, right, out there trying everything, really helped me. And it sounded like the same thing. Like, once I knew I had someone that had my back, I was able to run as fast as I can go versus having to worry. And it sounds like that kind of is what happened with you as well.
100%. Now, listen, like, folks, don't think it's all perfect. I mean, my wife is really freaking hard on me, even to today. With the success that we have. I mean, money to me now today has a diminishing value. Like, the more I make, the less important the money is. But all of you will go through that same thing. Your climb up, like, there's different levels, and you're trying to get to these certain levels. Oh my God, back when I was a kid, when I make, I remember when I got the first pro forma I put together for my Fat Man's Chops, it was $30,000 because I was going to make it per year, and that was like more money than I ever thought I could ever make. And then when I got in Wall Street, first year I did 74,000. I'm like, this is more money than I've ever made in my life. And then, you make 100 and you make 200, and each one of those levels, you're just trying to make more. But what I'll tell you, and I don't know exactly where it happens, but probably 1.5 million, a mil to 1.5. The money and the things you used to value about money changes. It has a diminishing return. So the more you make, it doesn't make you happy anymore. The more you make just creates more problems. So the only way around this, and this is, listen, Earl talks about this, Think and Grow Rich talks about this. Like, the only thing that somebody will find happiness in at a certain level of wealth when you get there, and all of you will get there, is giving. And how this happened for me, and I'm all over the place here, Troy, so I apologize, but this is a really important takeaway. In one of my hardest times, it was after the Great Recession. I had sold the strip mall, and I had sold my shops. I was a financial advisor. I was doing real estate. I was still snowboarding, hanging on to this professional career, which ended at 34 years old. But all this is going on. And I was literally trying to figure out who I wanted to be when I grew up. Like, I didn't know who I was. I had many hats I put on. First, I'm the hat with the real estate guy. Then I'm the snowboarder, right? And then I'm the prim cut financial advisor. I had an identity crisis, and this is not that long ago, about 2013. And I remember my wife suggested I go to this mastermind, and it was $5,000 plus travel plus hotel, and I just didn't have it. But I remember she's like, you got to go. The people that are going to be there, the founder of Uggs, the founder of Make-A-Wish, Greg, the guy that was putting the event on, like, was a renowned author, one of the oh my God, Think and Grow Rich. There's a name for what they are, but he wrote for them. So he had all these accomplishments, and she's like, you got to go there. You got to get yourself around people that are doing amazing things. And that's the only way you're going to get out of this funk. So I swiped my card. I felt sick. I remember I didn't stay at the hotel all the other guests did because I couldn't afford it. So I stayed at this shithole over on the beach. And I went there and I felt so out of place. There was surgeons there, and that surgeon, Duckfee, is one of my dear friends now. And like, you know, the guy that founded UGG boots, like I call him all the time. Like, and we talk about going surfing yet. We haven't made it happen yet. So it's just like, at that time I was out of my comfort zone. But the guy that put the event on, I remember I asked him, it's day number 2 of the event. I said, Greg, I need the best advice you can give me. That's all I said to him. He knew my circumstances. I said, I need the best advice you can give me. And he puts his hand on my shoulder. He leans into me. And I have a photo of this. It's epic. He leans into me. He says, Chris, I'm going to give you the best advice I can give anyone. So I'm thinking, yes, here it is. I'm going to get the best advice I can get. And he says to me, he says, give your best stuff away for free. And he smiles. And you can only imagine, Troy, I wasn't smiling. I'm like, you son of a bitch. I just spent $5,000 to come all the way out here to California to your house to be around all these people. And that's the best advice. Just give it away for free. You already know this, Troy. That was the answer. And that has still been the answer. I took it literal, and I tested it, and I did. I started putting lots of content out. I started doing Facebook Lives way back then. That was when they were big, and I would do it every week. The same time, I just gave and I gave and I gave and I never asked for anything, and I kept doing that. And even today, like with the millions of subscribers I have on all my social platforms and my YouTube channel, I spend $22,000 a month just producing content every day. We post on YouTube, but my YouTube channel is blowing up. Like, all I do is give, and all that happens is I keep getting back. But here's the moral to that whole story is, remember I mentioned the diminishing return on the more you make, the diminishing value of money until you start giving your time, giving money, creating a private foundation like we did to give. And listen, like, that has been the secret to my success. And all I do now is just give it. I keep giving it. But yet when you give, the universe can only do one thing in return. It's like a boomerang. You can just give it back, but give it back in abundance. And it just keeps happening. The only way that stops is when greed steps in and you stop giving and you start making excuses of why you're not giving. It all flips and you will go back down. But I will safely say I'll never stop because I find so much joy in it.
Yeah, it's amazing. I didn't come exactly that round, but I certainly understand. And it's something that I still probably need to be better at. But like, the one thing I'm taking away, I was like, I definitely need to do that 30-day challenge with the Earl Nightingale.
You do it for 60, do it for 90 days.
Yeah. I mean, I'm with it. Like, I do exactly remember what you're talking about. I mean, I've listened to, it sounds like we've had a lot of the same speakers in our mind, a lot of the same books, a lot of the same things that happen. So that just goes to show you, if you're listening right now, that like, you're not alone. Like, I think that one cool thing, like 30 years ago, you heard about somebody with anxiety, depression. You're like, oh man, that's weird. And now you hear about people, like real people struggling, right? Like real people, like, and you realize that we're all just human beings and we're all trying to live and get happiness. And what you mentioned before is like, no matter how much money you get, you're still going to be looking for happiness.
Yep.
And if you don't have happiness, and that starts with the inside, like you said, like you got to be grateful for what you have and for what you, not for what you don't have. And some of what drives, I'm sure you and myself, is what we don't have, right? And so for me, I have to constantly put that carrot in front of me, you know, whether it's the private jet or it's this thing or that thing, because I need something to drive towards. But I think, you know, as I've gotten a little bit older, I realized that it's like, wait, maybe I'm just looking for inner peace some way, some way to get this chaos together. But the one thing I've been moved by is that, like, when I first clicked on your website, you know, when I was doing my research, I was like, man, this guy has really put together a hell of a presentation. Like your stuff, and as I'm looking at your background of your studio, you can see the artisticness of just how dialed in the aesthetics of your business are from the website. Like, I don't know what the BYOB means. I'm sure it's a play on bring your own something, right?
Be Your Own Bank. And then there's Bring Your Own Porsche is our other YouTube channel. But yeah, Be Your Own Bank. That's our main business.
Man, I am so happy that you turned into the Millionaire Mentorship Podcast. It's something that I've been working on for over 3 years right now. We're up to 150 podcast episodes. A lot of them are virtual. A lot of them are in studio, which is what we prefer. If you have a guest that you think that should be on our podcast, all you gotta do is comment who it is, and we'll reach out to them. Or if you want to reach out to them and reach out to us, we'd love to have them on a show. We're looking for entertaining, inspirational people that, just like you hear on the podcast every week, that can bring value and help our listening audience achieve their goals. If that's something for you, comment down below and let us know. So can we go down the infinity banking? Because I've had a lot of people talk to me about it, but not anybody as smart as you. And it's usually been a rush topic as a presentation. And it's one of those things that a lot of respectable people that I respect talk about it, but they're never ever able to explain it to me. It was kind of like NFTs, except for when somebody finally explained NFTs to me, I was like, okay, I'm not doing that. But I feel like with infinity banking, I haven't done it yet. It's something I'm missing out on. Can you talk to people about what infinity banking is or infinite banking is?
Yeah, and I don't know why people overcomplicate it. I listen, I've talked to hundreds of people, Troy, like that said the exact same thing. I've had all these people on the show and they all explain it and I leave more confused than I came into it. And I'm just like, what are they saying? And I know normally they're talking about the product, not the process. That's the first mistake. They make it all about a product and that gets really complicated really fast. But here's this baseline, okay? So the infinite banking concept is a process. It has nothing to do with a product. It is literally just the movement of money in a process. It's mimicking a bank. So the definition of the infinite banking concept is taking back the banking functions in your life. So I can probably do this in a minute, explain it to you in the simplest way. Imagine if you wanted to take back the banking functions in your life, which means banks no longer are going to get payments every month from you. Your bank is going to get the payments. You're no longer going to pay interest to banks, but you're still going to make the same payments you make today, car payment, mortgage payment, rental, Airbnb, mortgage payment. You're still going to make those payments, but you're going to change where the payments go, and you're not going to give them to a traditional bank. But that all starts with how a normal bank starts. So if you wanted to create a bank, if you wanted to open your own bank, I know, let's just think big. You're ready to open your own bank. What would you have to first do? You'd have to buy some land. You'd have to dig a hole, build a foundation, put the branch up, then advertise it, get people to entrust giving you their hard-earned dollars that they traded hours for dollars for, and give you those dollars, and then you now are banking. And then what do you do as a bank? You take those hard-earned dollars that people gave you, and you take that money and you lend that money out to somebody at a higher percentage than what you're paying, for that deposit. So if the deposit's 1, you're lending it out at 5, you're making a spread. I think we all understand in the simplest form, that's how banks work, and that's how banks make money. Forget about all the other crap like fiat and fractional reserve. Just that's the simplest form. So let's say you want to be the bank, okay? You want to do what a bank does, but we don't want to buy the land. We don't want to build the property. We don't want to get all the licenses, and we certainly don't want to go out there and have to solicit people to entrust us to deposit their money. So what you would do is you would make one change in your life, folks. You would change where your savings, now notice I didn't say all of your income, just your savings component. Let's start there. You change where your savings goes first, because you cannot be the bank and make the spread if you still continue to deposit your money in the traditional bank, because they're the ones in the business. They're the ones going to make the spread. You can't. It does not work if you use that. So I'm going to get to the process, but now let's talk about that one change and where your money goes first. And this is what you've probably heard. The vehicle that has been used for hundreds of years, because this is not new. I didn't come up with this. And Nelson Nash didn't come up with this. He just pioneered the infinite banking term to the public and brought something that was done by the Rockefellers, the Rothschilds, the Morgans, the Stanleys, hundreds of years ago. Okay, they all did this. And still today, the wealthiest families like you mentioned that you talk to, they all do this, but none of them know how to explain it because they just do it. They don't know how to explain it. They just use it. They understand it in their lives, but they don't know how to tell people. So that place where you changed where your savings goes first, and this is going to come as a surprise to some of you, is none other than a specially designed, and you got to preface specially designed, whole life insurance policy. Now let's stop there and let's talk about why in the heck would we use a whole life? Dave Ramsey, Susie Orman say that's the worst place you can put your money. I was a financial advisor and I told people, don't put your money in whole life. That's a terrible return. And I would agree with all of those scenarios. But the one thing you'd have to understand is the first thing I said was specially designed. You see, this isn't an off-the-shelf whole life. This isn't the whole life that your broke-ass brother-in-law tried to sell you during Thanksgiving. This is a machine, a vehicle that is literally created from a contractual level to work as a banking mechanism. So we design and engineer the whole life. But here's the reason why you would use the whole life. Now, let me get into the process. Just trust in me for a second that that's the best place for you to store your money and start with, okay? Because we're building a foundation, which means that's where your money goes first. Right. Now, in order to do the infinite banking concept, we got to do the second thing, okay? That's it. There's only two things you need to do. Change where your money goes first. And the second thing is you have to follow this process, okay? So you have to add this step. Now, the money's in this specially designed whole life, which pays guaranteed interest. It's mutually owned insurance company, so it pays you dividends. The interest and dividends grow tax-free. It's protected against judgments and creditors. And not only that, if you die, a death benefit pays out to your family, although that isn't the main focus because you'd be really upset if you bought one of these and put your money into it and it was solely for a death benefit, because we reduce the death benefit to the lowest level we can by IRS standards, okay? So we've got the money sitting there. Now, in life, we need to buy things, right? And when we need to buy things like a car, a boat, a house, an Airbnb, just think of all the things that you would go to a bank to finance. You go to the bank, you petition them with a plan, an application, personal financials, business financials, and then maybe they give you the money, but they charge interest. So that's how we do it today. But we want to eliminate the bank. Remember, we want to take back the banking function. So what we first had to do was capitalize our banking system, which was your savings going into that specially designed whole life. But now let's just use cars. Actually, let me use debt, okay? Because debt is prevalent in this country right now. Let's use credit cards. Everyone listening to this podcast right now probably has a credit card that they use, and they probably pay a monthly payment to that credit card company. And that monthly payment is usually just interest, the minimum or slightly above, but you're just paying interest at a rate of right now, today, at this heightened interest rate environment, probably north of 20%. So just think about that. You every month are making a credit card payment to a credit card company, which is a bank, and you're paying them interest every single month. Well, that's not taking back the banking function. That's giving up the banking function. The bank is winning. So we saved up enough money over here in our banking system. So here's what we're going to do. We're going to take a loan from our bank, which again, remember, our bank is a specially designed whole life that we capitalized. We're going to take a loan from our bank and we're going to pay off that credit card. Now, let's stop there. We took a loan from our bank, from that policy. Why in the world would we take a loan to pay off another loan? Most people think that. That's dumb. Because a loan charges you interest, right? Yes. But here's the reason you would do it, and here's the reason why whole life is used and only used for the infinite banking concept. That loan we took, that wasn't a loan using our money. So let's just use a simple number, 10 grand. You saved up 10 grand. You're making guaranteed interest and dividends at 10 grand. Let's call it 5.5%. It's a little bit more than that today, but let's just use that number, 5.5%. Your credit card's 20. So already, if you're making 5.5 and you're giving away 20, you can see where the problem is. We need to make 20, man. Great. So when we take the loan from the insurance company, we're going to take 10 grand from the insurance company. Your 10 grand didn't leave your account, but you're now holding $10,000. Whose money are you holding? Well, you're holding the insurance company's money. But where did the insurance company get that money? Well, in a contract that we designed in there, it had a guarantee that when you die, they're going to pay out a death benefit to your family tax-free. So the insurance company just lends you part of your death benefit while you're living, and all they do is they give you that 10 grand. Now, bear in mind, the 10 grand never needs to be paid back, although we're going to, but it never needs to be paid back because the insurance company just made an adjustment to your death benefit. They reduced your death benefit by 10 grand, so you could use the 10 grand while you're living. And now when you die, 10 grand less will be paid out to your beneficiaries, which most people don't care about that. Now let's hit the second component. The loan that the insurance company gave you is not free. They charge right now about 5%, give or take a couple basis points depending on the insurance company, but let's just use 5. They're going to charge you 5% to take that $10,000 of your death benefit while you're living. Now, remember I said you put 10 grand in that policy where you're getting guaranteed interest and dividends at 5.5%. The insurance company allows you to use that money at a lower rate than what they're paying you. So right off the bat, are we not doing what a bank does with your money in making a spread? 5.5 minus 5. You just made 0.5%. I'm just using gross numbers. Just trying to get you to understand the concept. Okay. In theory, it's better than what I'm explaining, but you make 0.5% there. So spread number one, you're banking. But now you have that 10 grand that you pay off the $10,000 credit card. And remember that $10,000 credit card, you were making payments every single month to the credit card company. Let's call it $100 on 10 grand. Okay. And that was all interest. You no longer owe the credit card company you don't have to give them $100 a month or 20% interest, however you want to articulate it. But you're not going to stop making that payment because you can't steal from your bank. There's no bank in the world where the owner of the bank steals from their bank by taking loans and not paying them back. It just doesn't operate that way because you'd go out of business. So you have to treat your money the same way you would treat the traditional bank's money. And you would never not pay the traditional bank, right? Because they would file liens. And if you didn't pay the credit card company, you'd have problems. So the $100 a month we used to give to the credit card, we're just going to literally go in and change the name on the check. It's no longer going to be Bank of America. It's now going to be, I'll just use me, Chris Naugle. So that check every single month or that bill pay now comes back over. And now that I got this money, I'm not going to put it in a traditional bank when I have my own banking system. I'm going to deposit it back where it came from, the policy. So does everybody understand what I did? Troy, does that make sense? You just did a circle.
100%.
You did a circle. Now, you started with a whole life, like a vehicle most people would never think to, but we did it because we can earn uninterrupted compounding interest on our money. First reason why that vehicle's used. And we can use that money so we don't give up liquidity. So now we used it to pay off a credit card, but we then recycled and recaptured the money we used to give away to their bank. And now we control the money we used to give away. And every time we go around that circle, just think of it like Monopoly. Every time you pass go, you get paid $200. Well, every year that goes by in this cycle, the insurance company pays you a dividend. Plus, the guaranteed interest was compounded every day. So you get paid just like Monopoly does. And you just keep doing that. And when all the credit cards are gone, then you got the car. Okay, everyone has a car. They either lease it or they finance it or they pay cash for it or they steal it. There's 4 ways to buy a car or get a car. Okay, so now one of the things I teach, it's just generally accepted, is I teach people how to get all the money back for every single car they ever buy, drive, and own. Same concept applies as what I just said with the credit card. So let's just do the car. How do you get all the money back? So simple. If you bought a car, you're making a lease payment or a payment to the finance company that you paid for. That's how most people buy cars. So what we want to do is we want to capitalize our banking system, and this does take time. In my examples, the presentations that you had mentioned, it takes roughly 3 years to do, like in that example or whatever it is. And some people do it faster. So now let's just say I bought a $25,000 car and I got a loan with XYZ Bank and I'm paying them 5% interest. Okay. So I got a car loan, 5% interest, 25 grand. I've capitalized my banking system 25 grand. And I didn't just save 25 grand. Some of the 25 grand in my banking system came from money that I gave away prior to the credit card that I was able to recapture. So now that's some of that money is just money I used to give away. So I take a loan from my policy. I pay off XYZ Bank for the car. The car has no lien on it anymore. I own the car outright. But now all I'm going to do is the money I used to pay on that car, call it $500 a month. I'm going to change the name on that check too. And I'm going to take the $500. I'm going to deposit it back here in the policy. So how do I get all the money back? Well, you just reversed the roles. You became the bank. The bank always gets all the money back that they lend you for the car, do they not? Plus interest, but you're the bank now. So you now get all the money back, but plus the 25 grand never left your account, which means the 25 grand is still compounding, which means every single year you're making a bigger spread because by sheer mathematics, compounding interest means that every year you're compounding on a higher amount, which means your return is heightened and you're still making 5.5%, but now that 5.5% is being paid on a higher amount. Your cost for the money stayed fixed at 5%. But here's another thing. Remember that $500 payment or that $100 payment we were given to the debtors before that we're now paying back? Every dollar we put back in our policy is money we get to use tomorrow. So the car payment, today when you make a car payment, you can't call the bank and say, hey, I need that car payment back. Things got rough. They'd laugh at you, okay? But when it's your bank and you make the $500 payment back into your policy, that $500 is indeed available the next day. But that $500 also repaid part of the loan you took from your death benefit, which means now you're paying 5% simple interest, the amount the insurance company charges, on a lower balance every single month. But your cash flow didn't change.
You stop that, because that's such an important point.
It's critical. It's critical.
Chris, people don't understand the difference between a traditional interest rate and simple interest. And I think it's so critical, because it is like, it's a wealth builder for people who do not understand like what you just said right there. I know it was real fast, but I want you to stop and just explain the difference between simple interest from a mortgage standpoint and simple interest from like, and
use a home equity line of credit, because it's both a house.
Right.
If we can. So all of you understand how a line of credit works. I mean, if you have a HELOC, you know it. If you borrow money from your HELOC, they charge you an interest rate. Today, it's about 8% on the amount you borrowed, but it's simple interest. So if you repay some of that money back to the HELOC, they're paying, you're literally, your payment will go down. Same thing as a credit card. Your payment will go down because you're paying interest on a declining balance. Every payment you make back to the HELOC or the credit card, you're declining the balance. That's simple interest. Okay. It's very important that you understand how that works. It's the same interest charged on the money being used. Now let's flip over to a mortgage. The mortgage is the biggest scam ever created. I do so many videos on this, and nobody believes me until I show them the math. You see, here's the thing. I could tell any one of you anything I want. I can get you excited about the infinite banking concept. I can get you excited about everything. But I might just be lying, right? You might find out later that I wasn't giving you the whole truth. But here's the thing. Math never lies. My entire business, everything I teach is based on one principle, and it is the principle of mathematics. There is nothing that I teach, nothing that I do that does not have a backbone or a basis in mathematics, and I can prove every bit of it to a purite science. So let's talk about a mortgage. Some of you listening have one of those great mortgages at 3% that you got in the fairy tale land of when the Fed was keeping rates held low artificially, hence why we have the problems we do today, but we won't go there. So you got a 3% mortgage and you think you are crushing it. You think this is the greatest thing ever. You're screwing yourself because you don't understand math. You see, you're paying 3%, but to get that 3% true number, you got to have that mortgage for 30 years. You won't have that mortgage for 30 years. The banks know it. The mortgage companies know it. You will have that mortgage for anywhere between 5 to 7 years statistically. Yes. And then in 5 to 7 years, you will refinance or you will buy a different house or something will happen and you will reset the clock. So because they know that, how they have designed amortized loans is it's all about, and pay attention, folks, the volume of interest. Yes, the 3% number doesn't change. But how much interest you pay in the early years certainly can be adjusted by the bank, and it is. Your mortgage in the first 7 years of your mortgage, remember that 7-year number? In the first 7 years is heavily weighted so that you are giving up 60 to 80% of every payment to interest. This will scare you, and you won't believe me until you do the math, but it's all the math is in your mortgage documents in very small print, way deep in the mortgage. It's already, they have to disclose this. You're not paying 3% in those early years. You're paying more like 40 to 60% interest because they are winning in the volume of interest. So just because you got a low interest rate on your mortgage, only thing that does is gives you a slightly lower payment, but you're still giving away the majority of every single payment to interest. And that will go on for probably, I'm trying to remember where it starts to flip, 15 years?
Almost 22
Probably
years.
Almost 20 years. And now, folks, because people can't afford houses, now you got these products being rolled out where it's a 40-year mortgage. You think that's better because your payment's lower. You are getting screwed even worse. The flip point on those is probably like 30 years where you're giving up the majority of every payment to interest. You're never getting ahead in your house. The only way you're getting ahead in your house is because of appreciation, which then becomes depreciation, and you wonder what happened. And we're about to turn that cycle, folks. So simple interest, even at a higher interest rate, is always going to trump amortized interest. So the insurance company charges you simple interest, but they pay you compounding interest. One is going up, one is going down. It's pure math. So when I explain that analogy, and you had me stop, what we're doing here, we're compounding on one side. Our bank's money, the money that's in there that never comes out, because we're always taking loans.
Compounding for people who don't know what compound interest
simple.
is.
So I put $100 in an account, and your bank account's a good example. So just let's use your bank account. Let's not use an insurance policy. You put $100 in your bank. They pay you, I don't know, let's just pay you, they pay you $1 over the year on that $100. But they're paying you, let's just say it's 1%, okay? They paid you $1 on that 100 at a 1% interest rate. Next year, you earn 1% on $101. So the interest on 101 at 1% is more than the interest on $100 earning 1%. And imagine the next year. The next year, you don't have 102, you have 102 and some change because you were compounding on a higher amount. And just do that over and over, year after year. It's single-handedly one of the most powerful things in the financial industry, but also one of the most unknown or misunderstood. Albert Einstein talked about it a lot. So just, you want to go back to someone smart. Albert Einstein called compounding interest the eighth wonder of the world.
Yes.
He not only said it was the eighth wonder of the world, he said it was the most powerful thing in the universe, but we'll call it the financial universe.
Yeah.
That's Albert Einstein, who was pretty good at math, if I'm not mistaken.
Yeah.
So he said that. Well, the best place in the world to earn compounding interest is in a stupid whole life insurance policy, because it's the only place in the world that I have found. And if any of you have a better place that can do all the things that I mentioned, please send it to me and I will change every presentation and every speech I ever do for the rest of my career. The answer, you will never find a better place, because there's nowhere else you can put money, use that money, and still earn the same compounding interest on every single penny that's in the policy. It doesn't exist, which is why we use whole.
You got me excited about this, Chris. Chris, I got a question for you, and this is one I'd love for you to solve, because, I mean, this is a game changer if you're going to solve it. I think that you're the type of guy that thinks this way enough, and you're able to break it down. Like, I totally understand what you're talking about now, just like you said I would. So let's take the insurance world, which we're playing in right now, right?
Yep.
So one of my problems is, as you know, if you're a real estate investor, the only thing that you can't control is the price of insurance and the cost of taxes.
Right.
And that can kill your returns overnight. Talk to the
Correct.
people in Florida right now that went from $6,000 to $12,000 in taxes. So
not just taxes. Hold on. Don't miss the insurance. In Florida, their insurance premium probably went from $3,000 to $9,000.
Right. So one of the things that I would love to do personally, just like we're talking whole life, is have my own insurance policy for my own properties versus me having to pay, say, this insurance company $20,000 a year, $40,000, $50,000 a year. I'd rather insure my properties through my whole life policy. Can we do that?
Yes, but again, remember banking, you'd have to capitalize your policy, your banking system, to the tune where now the risk is able to be mitigated. So if your property's risk is $300,000, you'd have to capitalize the policy $300,000. And as your property's risk went up because the value went up or different things happened with the property, you don't need to worry about capitalizing that in your policy, because your policy is automatically going to capitalize it because of mathematics called compounding interest. So that's the downside. So you couldn't use a life insurance policy to take over an insurance policy on the property, but you could eventually self-insure, and a lot of people do, especially now because insurance companies are just out of control. The PNC. It's out of control right now. And I have this girl, Karen, who has been my insurance agent forever. And she's just like, I've never seen anything like it. I don't understand like how they're doing what they're doing. I don't even know how we're going to get out of this mess we're in. But nonetheless, like, you could self-insure. It would just require capitalization, which would take time or just a bunch of money.
Yeah, that's awesome stuff, man. I really appreciate you sharing all that with me and going down and sharing your story. Let me ask you something. For people who are like maybe where we were probably 20 years ago on the cusp, I mean, things really changed for me at 28 years old. I moved and everything kind of like fell into place, not overnight, but it happened, right? And I don't think if I had, I think, my mom raised me telling me basically kind of like yours that I can do anything I want, just put my mind to it.
Yep.
And then other critical choices, I would say, like you talked about some of these, this happening and you making a critical choice, right? I think that critical choices, along with the discipline of saving and doing these other things, what things do you think that young people, like, what would you advise your son, your daughter to do right now in today's world, like with, everybody having so much information, but not having the execution.
Well, it's a really good topic. I actually did a TEDx talk about this. It was called A Letter to My Daughter, Rethink Money. So you couldn't, I almost would have said you cheated and you saw the TEDx talk by asking that question. So I'm very passionate about educating children or teenagers or young adults on how money works. Let's table the infinite banking concept for a second, because the infinite banking concept for most young teenagers isn't going to be appropriate because they're not in the mode of saving yet. They're in the mode of spending, and they're just getting started and working and making money, and they try to spend every single dollar. But here's what I tell my daughter. Number one, I'm teaching my daughter's only 4, but I am teaching her by using play money and play banks how to be the bank and how that recapture works. Remember the 20% of the credit card? Instead, you pay the 20% back to yourself. I'm teaching her those things very simply. But let me just break down something that I took and I modified from The Richest Man in Babylon, which is one of the most.
Ooh, another one, baby.
Listen, we're on the same wavelength. So it doesn't matter what book I mentioned, you've probably read the book. But The Richest Man in Babylon, I remember somebody said to read that. And I remember I was getting into the book and I was reading it. It's in a different tongue, so it's kind of hard to articulate. You gotta take gold and meat and make it dollars. The way they talk is very hard. But I've read that book now probably 15 times.
Yeah.
But I remember when I was reading it, it's a very short book. I was reading it and I was on a plane and I was writing it all down. The 10 laws of gold, okay, is what they basically teach. I think it was 10 or maybe it was 7 laws of gold. But anyway, they go through these laws and they tell them in stories. Each law is explained in a storyboard, in a parable, if you will. So here's the simplest way for kids. If you're going to teach your kids how to be good stewards of money, if you're going to teach them the truth about money, tell stories of how money works. The first one I would teach people is the law. I call them the laws of wealth. The first law of wealth is you must keep 10% of what you earn. So how I teach my daughter that, and I don't have a single here, but let's just say this is a single. I explain for every dollar that you ever get, whether it's from the tooth fairy, from mom and dad for making your bed and doing your chores, whatever it is, what you must do is and this is how I explain it. I take a fake dollar like this. This is a fake 100. I take it and I say, you must take 10% and you must put it away. And I put it in our little piggy bank. And that money is money that's going to grow so that you don't have to work as hard later. And that's the first most important thing we must teach our kids. Because today, what do we teach our kids? We teach them, you make money and then, hey, there's all these cool things you want in life. Let's go buy them. Let's go buy a Starbucks. And then at the end of the month and at the end of the week or month or however they get their money, they have none. And then it requires them to go back and work. Now that's the oh my God, mouse wheel, whatever.
Yeah, I know what you're talking about.
Oh my God, the gerbil wheel. Hamster wheel. That's the hamster wheel. And that's what people are taught. That's what kids are taught in school, just so you all know. That's what you're taught in college. You are taught to be on the proverbial hamster wheel. You don't even know you're being taught that. You're being taught and conditioned to get a job, of which then you will make money. And over your career, you'll make more and more in that job. But when you make money, Parkinson's law will kick in. The more you make, the more you will spend. And you are taught this. You are literally taught and conditioned this in a level you don't even understand is happening. So every dollar you make, you will go out and you will spend up to that money. And even then in life, you will start getting bonuses and things, and you'll anticipate the bonus and you'll pre-spend the money. Yeah. So if we just teach our kids that first law of wealth, which is every dollar you make, you must take 10 cents of it. And I do it just like that. I take $1 and I take 10 cents and 10 cents goes over here. Okay. Law number 1. Law number 2, the second law, is once we save that money up, what we need to do is, just like we have to go out to work, we can't leave our money be lazy in the piggy bank. That money needs to go work for us. You see, money has a unique thing. It's a tool, but money has something we don't. And that is the ability for money to work 24/7, 7 days a week, without ever complaining, without ever resting, without ever eating. It doesn't need any of the things we need. We can only work as much as we can because we get tired. We need to eat. We need to stop. We want to go on vacations. We need respite. We need all those things. Money does not have that. So teach your kids that once they save it, their job is to find a place for that money to go out there and work. So what we do is how I do it with my kids. I said, these are your little marching men. These are your little men, the green men. What we're going to do is we're going to send our green men out there to do work for us. And I teach them lending because I'm in the banking industry. So I teach banking. So I teach them there's other people in your life that are going to need money. And I do this with her little dolls. She's big into Paw Patrol. So she's got Chase, she's got Sky. So we did it with Sky the other day. So she saved up a bunch of money in her bank, just like I explained, how we did that. So she had the money there. And I said, hey, what does Sky want? And she's got all these cars, from the movie Cars. She's got all these little cars. And she points to the car. And I'm like, Sky wants that car, huh? And I'm like, does Sky have any money from savings? And Vivi's like, yes. And I'm like, how much are you going to charge Sky for that money? And she says, I don't know, she just comes up with something. And I say, okay, how about this? How about we give Sky the car that you have? You own the car and you're going to give it to Sky. But what Sky's going to do is you're going to lend some money from your piggy bank to Sky. And I show her taking money out of her piggy bank, giving it to Sky, so Sky gets the car. And then I say, but then Sky is going to give you a little of that money back every single month. And she understands time now at 4. So what I do is I then take a little bit of that money we gave to Sky and I move it back and I put it back in the piggy bank. And every single month I move a little bit more and put it back. And she sees this happening. And then all of a sudden Sky has no money. But then what I do is I show Sky has been doing the same thing you were. Sky's been working. So behind Sky, I hid some coins. So then I move Sky. I say, this is Sky's money. This is money that Sky didn't borrow from your bank. This is money Sky had. But you see, Sky paid you all your money back, but Sky still has to keep paying you because now your money was working for you. And now Sky has to give you her money in order to keep that car. Otherwise, we're going to go take the car back from Sky, and Sky doesn't want to lose the car, does he? And Vivi's like, no. All I did there is I explained to my daughter in the simplest way with toys and things that she articulates. I just showed her a flow. But I showed her all the money that she gave from her bank to Sky all came back in abundance and more came back. And I asked her, I said, so do you have more money in your bank now than you did when you gave it to Sky? And she's like, yeah, Sky gave me her money. And I say, that's banking. So that's just the first 2 laws. Save 10% and make your money go to work. And then law 3 is protect your wealth, which we get into. Don't invest in things you don't understand. Like a lot of people put money in Bitcoin, but they can't even tell you what Bitcoin is. Because the Uber driver told them, and I read them, or older folks, I do a talk about the Kennedys, and how Kennedy was getting his shoe shine back right before the Great Depression. The shoe shine boy was giving Kennedy stock advice. Yeah. Kennedy was a wise investor. So what he did is he went back and he sold all of his stocks because he said, if the shoe shine boy is giving me stock advice, it's time for me to get out of the markets and sell everything. And he did. And then right after that, the Great Depression came. And if you follow the Kennedy's path, like that's where they made all their money is during that period of time because they had the money because they got out when everybody else stayed in and rode the roller coaster down. So these are just simple things we can teach our children. And folks, if any of you want to know how to do this in parable, watch my TEDx talk to my daughter. I go through those 6.
We'll link to it on here for sure.
Yeah, the 6 laws of wealth, but I do it in story form of all stories of my life, which you already all heard. You heard about my mom, you heard about the stores, you heard about all that stuff. I use all of those stories in parables to teach my daughter how money works through 6 simple laws of wealth.
Well, Chris, man, I can't say how much knowledge you've jumped on. This has been one of my favorite podcasts just from no, I'm just being honest with you. I feel like we're kind of on parallel universes a little bit. We've read all the same books, I would argue. I didn't ever listen to your TED Talk, so I'm glad I asked the question. And I really appreciate you coming on here and dropping knowledge. And for those of you guys listening right now, Chris is actually going to fly out. I didn't even realize it until yesterday. And my camera person quit on me last moment. And so he was willing to zig and zag, just trying to tell me what type of a person you are. How do people follow you? How do people get a hold of you? How do people connect with you?
I'm not hard to find, folks. All my stuff is free. You just go on, type in my name, Chris, Naugle, and I will pop up right in the top. I'm not hard to find. But here's the thing, like I would tell everybody, is my YouTube channel. I put my best stuff out there on YouTube, and it's at the Chris Naugle. So if you really want to find it, you can go to chrisnaugle.com or at the Chris Naugle, and you'll find me on every social channel. But do yourself a favor. If what I talked to you about with banking and with the infinite banking concept even struck a nerve, I've got a video, an epic, simple video that's on all those channels. But go to my website, chrisnaugle.com, and it'll pop up. It's a 90-minute video, so it's long, and you're thinking, oh, I don't want to watch a 90-minute video. I promise you that 90-minute video will change your life, and here's how I know. How do you think I learned this stuff? My mentor made me watch the same 90-minute video, and in that video, some of you maybe kind of picked up on something. You're like, wow, that's really wild. I want to learn more. That 90-minute video will teach you the fundamentals of the infinite banking concept at such a simple level that your fifth grader will be able to understand it. So watch the 90-minute video, and then the rest is easy. If you want to book a call, it's all on there.
And make sure for everything that Chris has provided, make sure that you are absolutely giving us a 5-star review. He's been dropping tons of bombs on here. There's a lot of information there. From a guy who's heard the infinite banking speech probably 6 times, I would tell you this is the only time it really made sense where I've actually got my, we need to talk offline a little bit more, because it's definitely something that I'm interested in. And I think that too many people overcomplicate it.
It's so simple.
They try to bring out graphs and interest rates and this.
You don't
need
any of it. Don't need any of it.
It's like, oh, you're going to get a life insurance policy probably already. Just borrow against your life insurance policy and then pay it back.
But again, it's specially designed. And let me just add one thing to that. The policies we design, the reason why whole life or most life insurance gets a bad rap is it's expensive. Number one, they perceive it as expensive, and they perceive the commissions as high. But what if I told you we reduce the commissions 60 to 90%? So that you get 60 to 90% more money right away. So the policies we design have immediate liquidity immediately in the first 30 days, and anywhere between 60 and 90% of your money is available just like that. So you don't have to, like a regular life insurance policy, you're putting money in for years before you have a nickel to use. Ours, the way we design them, immediately you have liquidity to do exactly what I said with the credit cards, with the cars, with the real estate, anything you want.
Guys, make sure you follow, make sure you like, make sure you share, and make sure you hang around guys like Chris. Remember, if your circle is not the same type of people growing and doing more shit, you're in a cage. So definitely get around people like this, put information. Like Chris has been dropping a ton of knowledge. I really appreciate it, man.
Well, thanks for having me on the show. It was an honor and a privilege.
I've got an amazing podcast. We've had over 150 entrepreneurs, investors, businessmen, businesswomen, politicians, and we have interesting conversation. Think of it like Joe Rogan meets real estate meets going down the rabbit hole as Troy Kearns. My podcast is something that I really enjoy. The guests that we bring on are super informative, and they will add a tremendous amount of value to you. Comment the word podcast, and I'll send you a link to it so you can check it out and let me know what you think.